Jon, welcome to the show.
Glad to be here. Thanks for having me, Mark.
So glad you made it and we could do this. Before we get into your story and some of the valuable insights you found and what we've been able to discuss together in our work together with Bank on Yourself, tell us a bit about you. And that can sometimes start with a daily morning ritual. What is it like when you're first getting up and going? You told me you have, a ritual that you try to follow most morning. What's that like and what's important about that to you?
Yeah, thanks, Mark. I'd say my daily morning ritual is very consistent. So I wake up nice and early before the kiddos are awake, before my wife is awake. I can get downstairs, I can open my Bible and read for about 30 minutes. Then everyone's awake and I can get them ready for school. Since COVID, I work from home mostly. So my ritual includes walking my kids to school every single morning, which I absolutely love. And I know that that's a great memory that we're going to get to share for years to come. But once I drop them off, I then get home, put on my running shoes, and I go on a run. And if it's a Friday, I'm listening to your podcast. But if it's Monday through Thursday, it's a book or something else that's keeping me going. But it's something in my ears and something on my feet, kind of is a self propelling two hobbies, if you will. So get that run done, usually about a 5K in the morning, and I'm home to shower and start my day.
Oh, that's great. Yeah, I mean, you honestly, you've already won the day if you can do all those things before most people are rolling out of bed. So fantastic, man.
Yeah.
What do you think that does for you? Just on a personal level, what does that help you accomplish?
I mean, I think it accomplishes a lot. Obviously the interactions with my children. I used to, work in an industry where I would be up way before they were awake, and I would see them after they got home from, daycare or school.
Mhm.
So, interactions obviously with my kids, whether they're great interactions or we're all still sleepy and, we're grumpy in the morning and don't want to go to school.
Mhm.
I think that's extremely important with, regards to being, family man and a husband and a father. But there is definitely something to be said about exercise. I think putting your mind in a place where you're allowing endorphins to run and getting your heart rate up, I think is extremely important. And I think I personally want to do that as early as possible. So getting that run in. And then also, like I said, it's two separate hobbies. Listening to a podcast like yours or listening to a book that I can continue to educate myself while I'm running is two separate but helpful things that I get to do in the morning. That really, like you said, it's like you've accomplished quite a bit already before you're really getting into the morning meetings and the
Yeah.
rest of the day.
Well, and speaking of meetings, you're a leader at your corporation that you work at. What is leadership to you, and who taught you some of the skills you now enjoy at your work in leadership?
Yeah, well, my story is not a up and to the right story. I went to school for architecture, so I did get licensed as an architect living out in California, and then me and my wife and our family decided to move to Florida in 2017, and obviously we took architecture with us, and I got my license reciprocated in Florida. And as the years went on, I found opportunity for me to in a way not change careers but evolve career, if you will. So I was able to take my education and apply it to different aspects of my professional life, which went into things like project management, working with teams, understanding different aspects of business, which led me to what I currently do, which is for all intents and purposes a finance background, or a finance job, if you will. A lot of finance, in my perspective, is telling a story.
Mhm.
Why do the numbers work the way they do? At the end of our quarter, why are the actuals coming in different from our forecasting? And so that's my current role. That's my current job. I'd say also I've taken on multiple positions that involve kind of a chief of staff type demeanor or expectation. So I'm kind of having to be a jack of all trades or working with a variety of different functions or different groups. I'd say the people that have really inspired me or have helped me along this way have been mentors that have, kind of existed outside of that space.
Hmm.
So they're not architects, they're not finance people. They're the community of friends that I have that I spend my everyday to day life with. So it's been very rewarding, I would say. I didn't hit the jackpot with this community or anything. It's not like I live in a special area of the country where, nobody knows about it and we're all, very secretly, being successful together. But I say it's what you make of it. It's what you
Mm.
build into your
Yeah.
relationships, and that consistency of developing a day-to-day rapport with people that has really inspired me and allowed me to do the things I do.
It's not so much the cards you're dealt, but what you do with the cards you're dealt
That's
to
right.
help improve your situation. What you give is what you get in many ways. And leadership, you've certainly found yourself in a leadership role now. Now we met. I was looking back on my notes. We had our first kind of deep dive financial analysis conversation in March of 2020.
Yeah.
So there was some things
Wild
going
times.
on. Yeah. So what was it like? Take us back to that moment. Tell the audience how we met and what caused you to reach out in the first place.
Yeah, about a year into the job with the current company that I'm with, and it was at this company that for whatever reason I decided I really wanted to better understand personal finance. And it was the same story and the same signing up of a 401k and doing all the things that I was getting, put into with the new company. And I started listening to some podcasts. Actually, the very first podcast I started listening to was one by a gentleman named Ryan Rieger, who
Mm-hmm.
is actually part of our community here, and he has a podcast, Streams of Income. It was from that episode that I was listening and I heard, you speak about finances in a not so average way, in a very, very, not even average, but just completely separate from what I've been used to, what I've been told. Not to say I grew up with a particularly strong financial background or parents who talked to me a lot about money. But what I did know kind of off the street, if you will, and what other people talked about is, you put it all away in the 401k and you let it sit and, you let it grow and do its thing and you don't worry about it anymore. And so to hear you speak really resonated because it was something that I could apply my logic to, because the other logic didn't make any sense to me. And I actually had a financial advisor come to our office and start talking to me about HELOCs and other things that they were wanting people to invest in their money and their retirement funds in. And I kept asking these basic, what I thought were basic financial questions and mathematical questions even, and saying the math is not mathing. I don't
Mm-hmm.
understand, how we're getting from here to there. Can you walk me through it again? And that was not the conversation you and I had, especially with my wife in the room as well. It was this makes sense. This is amazing. I love, everything that Bank on Yourself has to offer. And it's only gotten richer as we've applied it to our daily life,
Mm.
and we've been moving forward and growing with it.
That's phenomenal. And for a guy who now works in finance, for you to, with the math isn't mathing, with a
Right.
traditional financial planner, investment advisor, stock jockey, whoever it was in the room there with you, that says a lot about what the rest of us are told to swallow, whether we can figure it out or not. Guys, what Jon just said is even the finance expert here, who isn't necessarily a financial advisor, but he's doing finance and he's helping major companies, work in their financial world to just say the quiet part out loud that, hey, this logic does not make sense. Jon, what was it about the logic of traditional financial planning in particular that you just said, hey, this is not my cup of tea?
No, Mark, it still is, and I still, I listen to podcasts, I listen to things on runs every day, and I still want to hear what other people have to say. And there's this one thing that is always glazed over, and I've heard plenty of people on your podcast kind of raise the flag on this, and then everybody else seems to glaze over this. With when you talk about the 401k, you're talking about putting money into a system like the stock market. That is a system, and then you combine that with this eighth wonder of the world that is compounding. Apply that to the stock market. However, the stock market never maintains that. It's always changing. It's
Hmm.
always going up and down. So every time it goes up or goes down, it's breaking that compounding
Yeah.
path.
Hmm.
Another thing that really has always bothered me is when I have asked financial planners in the past, where do I find the view of me putting in my full investment? So if I'm putting in, let's say, $100 a month into a 401k or into an IRA, where do I get to see, hey, over the course of this many years, you've put in of your own money this amount of dollars, and this is how much is grown from that. So where's my investment compared to the growth from the stock market? For whatever reason, I can never see that. I can never see how much money I've actually put in unless I'm tracking it personally and I'm keeping tabs of it. But it seems like they are not keeping tabs of that.
Well, they may be keeping tabs, but they may not want to disclose what they have found out.
Exactly my point,
Yeah.
and that's what again, if I take the spreadsheet that a life insurance company is able to share, where they show where your policy is going to grow if you pay your premiums and you do what you're supposed to be doing, I can very simply take a couple of columns on that spreadsheet, and I can add, what is my total investment, where's the skin that I'm putting into this game, and
Hmm.
then what is coming back to me. And right now it's better than anything I can see on a 401k.
It
So
just seems so obvious, like I remember when I could not show projections like that into the future on stock investments, whatever. But
right.
when you have an agreement with your future self and you have a contractual agreement with a 100-year-old financial institution that will guarantee that if you do this, they'll do that. So if I have such and such with my money, if I do dollars in, they'll give me these dollars out. If I put $100 in today, I get $300 a month in retirement.
Mhm.
That seems simple enough, right? But how rare is that in our world today? So thanks for the reminder on that, John. That's
Yeah.
great.
Yeah. So that, I would say, is the biggest thing for me is, when you think about bank on yourself, that is truly leaving it alone. Whatever you pull is non-direct recognition. So it's not touching cash value. That cash value will
Mhm.
continue to grow uninterrupted, even as you're doing the things you want to do that you can't even do with the monies that you're putting into the stock market. So that to me is the biggest thing.
Oh, that's great. You're right. There is no such thing as compounding uninterrupted in a market that's volatile. And even a temporary loss, even for an afternoon, is a forever loss
Mhm.
on your lifetime net worth of whatever you could have earned on that dollar that you lost on that Tuesday afternoon when Tesla dropped or when Microsoft stock dropped or whatever. But you're saying with Bank on Yourself, the cash value is guaranteed to grow every single year. The compounding of the market is a total fool's errand. With
Mhm.
whole life insurance, there's uninterrupted compounding growth. And so that's part of what I guess sounds like pushed you over the edge. And I know when we first met, you guys have had a great desire in wiping out some debts, some student loans. You wanted to be generous with your funds. And take us to that moment and tell us what you wanted to do with the policies. And since you've started them, what you have been able to do thus far.
Yeah, we were actually able to not only get a policy loan to pay off student loans, but we were also doing it twofold. We pulled out a policy loan for the student loans and to buy my wife's dream car. So we were able to take that policy loan, that cash value that had built up, and we bought the car. And then a year later, this year, in fact, we were able to then write the check to pay off her student loans.
How cool is that, man?
It's
That's
amazing.
amazing. Some people, when they first wrap their minds around Bank on Yourself, and they've got some debt, like some student loans, let's say, uh, they start working out the process in their mind, and they get stuck at this point where they say, "Well, I paid off my student loans. Why do I have to pay a loan to my insurance company? That seems like I'm going to be in debt forever." Well, and
Right.
you answered a few pieces there. The control. Would you mind to just speak a bit more about why a loan to a life insurance policy that you control is in your best interest versus, say, a banker's best
Yeah.
interest?
what makes sense to me as an individual as well is when we are paying our premiums into our life insurance policies, we are paying for that privilege to borrow from ourselves. So
Hmm.
and we're not just paying for this privilege to borrow from ourselves. We are also paying into our futures.
There you
So
go.
we're
Hmm.
doing two things at once. We're not doing just one or the other. And so that's the way I explain it to my wife, and I think it's yes, we're paying into our policies, which is going to continue to grow, and then we are going to take a policy loan based on what we can leverage from that policy
Hmm.
to pay for some things we want, like your forerunner, or to pay off our student loan debts, or to pay to redo the kitchen at some point maybe. And that money, it's not necessarily our money. That's money that's coming from the insurance company, but it's that privilege to be able to pay that back. And we haven't even talked about the I think the big thing, which I don't
Yeah.
think we talk about enough, which is, are we talking compounding interest, or are we from that we're paying if we pay back a loan from the bank, or are we talking about simple interest, which is what we're paying back when we're paying back a loan from the insurance company? Which,
Hmm.
if you look at, and I know you've got some tools around that repayment schedule, that amortization schedule of how much are we really paying in interest when we're paying back a policy loan versus how much are we really paying in interest, which is usually a couple factors more than what we've actually borrowed in the first place when we're doing it with a bank.
Huge, huge, and well said. You're you're borrowing it from your future self, you might say, when you borrow against your life insurance cash value. In essence, when you pay a premium, and you said it very well, you're paying into your future. I say, you're saving for your retirement with your premium dollar. And I liked what you said about having the privilege of accessing those retirement dollars today without liquidating those
Correct.
retirement dollars today. That's a huge piece to the puzzle, that uninterrupted compounding you mentioned earlier while accessing it via simple interest loans. That's a beautiful thing. Now, fast forward to this most recent fall. We had a couple of big hurricanes come through your beautiful state, the Sunshine State. Tell
Sure
us
did.
what was important about those to your overall financial plan, and what were you able to do in terms of your loans when the finances got a little shaky during that season.
Yeah, and I would say it was a hurricane on the outside.
Okay.
We had to deal with things with the house and boarding things up, and obviously there was some power that went out for a number of days, and that was an adventure. You know, but from a financial standpoint, it really didn't affect anything, right? And that was kind of the fun story I got to have, or the fun conversation I got to have with my wife. Is my wife and we've talked about the loan repayment, or the policy loan repayment for this current loan that we have through our insurance. And for her to turn to me and just say, "Hey, I may not do our payment this month," and for me to turn to her and say, "That makes complete sense. We just
Hmm.
had a hurricane and we had to do a couple of things we weren't expecting. We can now move on. We're now into December. We can, we're back on schedule, but we were able to happily miss a payment, if I can put it even in quotes, miss a payment that we've set for ourselves. And that's two human beings talking with a life situation. There's
Wow.
I do see, when you log into a bank or something, there's usually that big red banner that said, if you have been, affected by Hurricane Milton, please call this number, and you'll probably wait on, hold for, a couple of days and talk to another automated message that will say, we're so sorry, but, please make your payment on time.
Hmm.
That's obviously not the struggle we have to deal with
Wow.
anymore.
Wow, that's a big deal. You're exactly right. You've brought banking back down to the you and me level, or in
That's
this case, the
exactly right.
husband wife level. But it's more human. It's more humane,
Yes.
and you've given yourselves the grace when needed. And I'd say you both are also, you're very responsible. You're not shirking your responsibility to your future self.
Mhm.
You think about, hey, the faster we pay off this loan, the faster it'll be liquid for the next dream car or the
Exactly.
kids' college coming up.
Exactly.
Would you mind telling us where you want to take your policies as you see them and how you might use them in the future?
Yeah, well, and I mean, you hit on it right on the head, Mark. I mean, that our focus, our big focus at the moment is, and this is where my podcasts lean towards, and my audiobooks now are geared towards, how do I prepare or put myself in a position to be supportive of my children when they're at the age when they're going to be going to that next level of education. Now, I don't know what that looks like. I don't know if that's taking gap years, if that's college, if that's 4-year college or community college or trade school. We don't know. But what
Hmm.
I do know is that we will be prepared for it because of what we're going to continue to grow in our policies. And again, we're not just growing our policies for the sake of paying down student loan or helping our children, who will also have their own repayment schedules with us if that's the path that they choose to go down. But we're talking, there's death benefit associated with this. There are riders associated with these policies that are continuing to grow and add up as well as we continue to pay into this. So it's like this multi-headed, beautiful monster that's continuing to
Yeah.
develop, along the way, and will service us in ways that a bank just can't.
That's right. Yeah. Well, to use that metaphor, if you're gonna face a multi-headed monster, you want it to be beautiful, and you want
Right.
it to be on your side of the battle,
That's
right?
absolutely right.
So, what's on the other side? Well, the facing the monsters of college tuition, and other hurricanes that will hit us, no doubt, in our lifetime. The external pressures of life. I mean, the average American will crash their savings multiple times over as they buy that car, as they send that kid to college, as they have that job loss that no one expects, but it
That's correct.
happens to almost everybody, the medical emergency that no one expects, the roof repair that no one expects.
Mhm.
But it's sort of like not expecting your wedding anniversary. Okay, it's gonna happen. So
Right.
just put it down and prepare for it in advance. And Floridians seem to be better than most at preparing for storms. At least the smart ones anyway. So keep up the good work there. And guys, there's lots of podcasts out there, whole shows devoted to how you can prepare your kids for college. We did an episode with one of the hosts, Dave Kozak and Joe Kearns, back on episode 298. The show is called College Knowledge. That's the name of their show. But the episode, we went ahead and ripped off their title, and that's the same name as the episode there. So 298, if folks want to hear more about that, or check out the show, College Knowledge. So, John, as we kind of wrap up here, one thing you also mentioned was that you had taken out, and some people ask this, it's more of a technical or logistical question, but some people wonder, well, Mark, if I've taken a loan out for a car, can I still take a loan out for student loans or an emergency? And I wonder if you could speak to that. Are you able to take out a loan when you already have a loan on a policy?
Yeah, absolutely. Now, I preface it with saying you have to be clear on how much cash value you have at your disposal. That's what I love about working with you, Mark, is, every 6 months or so we get to check in with our families. And then along the way, we're also talking about, hey, where are our loans standing, and, what's the available cash value that we could spend, and where are we allocating those?
Mm-hmm.
Right. So if we're allocating those dollars similar to how you would allocate a budget, what is the cash values stance? How are we paying those down? And then while we're paying those down, it's freeing up more dollars to now allocate elsewhere. But I think that's the beauty of what we're doing here, right? Is we paid my wife's forerunner off. We wrote a big check. First time getting to do that, and that was fun. Handing over a check to the dealership, and they gave us the car, and we drove away. And then a year later, as we were paying that down, we had hit that threshold where we would be able to pay off the remainder of her student loans. So instead of going to a new bank or a new institution, signing up for a new loan, we simply asked our policy to write us another check, and they sent the check in the mail within a couple of days or a week or so, and then we were able to turn that around and pay off the student loan. So it's all happening in one loan, and now that loan is kind of two things if we want to assign it. We've got car and we've got student loan, but it's mashed together in one, amount
Mm-hmm.
that we are now paying that down, and of course
That's
we're
great.
keeping good track of it. And so that's that's what makes this process all the more easier.
There you go. Yeah. So if folks want to delineate what the money is in their policy, we have several different tools that clients have access to be able to name and prioritize the cash values. And so when you borrow from a policy for a car, then you have another car that you need to buy, or a kid goes to college or student loan to be paid off. You can name and track and repay the loans at your discretion with any level of detail that you wish. Some people care more about that than others. I like doing that because it helps me know, hey, I paid myself all the way off for my car. I made good on my promise to myself. That's a feeling, a truly, empowering feeling.
Right.
So as we wrap up here, Jon, I want to take just a minute and zoom up the ladder again with you. We started kind of at the top with leadership. How do you define leadership? And tell us what are the skills you want to make sure your kids have as they become leaders in their area and as they grow into adults.
Yeah. So with regards to leadership and what's served me very well, kind of in my career, is leadership is not led necessarily from the front. It's either from the back, as kind of that saying usually goes, or it's right there in the middle with everybody else. Leadership is not necessarily even being the smartest person in the room or the subject matter expert. It's really being someone who can take a thought or a concept that may be very complicated or has been made out to seem to be very complicated, and really simplifying it down to its component parts, so that others around you who have other gifts or other strengths can come together and really formulate the solution. And so that's what I've done in my career, is not necessarily being the smartest person in the room. Again, my education is not finance, it's architecture, but I get to go into a conference space, and I get to talk with financial planners and analyzers, and really kind of move things along, because there's a different goal in mind, a goal that maybe not everybody's aware of. My children are not fully aware of my wife's and my financial goals yet. But for us to get them from where they are now to where we want them to be, it takes us coming alongside them and really kind of instilling our beliefs and our thoughts, which are developing and growing even now around money, and helping them understand and look at things a way that they're maybe not going to get in school. Well, they're definitely not going to get it in school. And certainly don't want them to get it from their friends either. So,
Right. Yeah.
but that's what I would say is leadership to me is working alongside, and really simplifying the things that are seemingly complicated.
Fantastic. I think you've done a lot of that on this show today, and hopefully folks have heard you simplify the complex, out of money, finance, whole life insurance, banking, talks with your spouse about money. You might be ready to launch your relationships and money podcast before you know it, Jon.
Oh boy.
Yeah, if you can get 5 good conversations, I think you're putting yourself way ahead of the pack there. So thank you for the good work that you're doing. Thank you for the inspiration you give to your family, to me, and many of our other clients. How can folks find you if they want to kind of learn more about your perspective on money and how you've handled your bank on yourself policies?
Yeah, so I am on the Mighty Network. So the Not Your Average Mighty Network is running and up, and it's very large. And so if you want to find me, my name is Jon Thiele, and look forward to connecting with you.
There you go. Yeah, and just for folks that aren't aware, there's 1,000+ members on our free podcast fan and community site. So it's where we discuss the episodes, we dive deeper, we have almost daily content on there and discussion and interaction. So if you go to notyouravg.mn.co, that's notyouravg.m as in mighty, n as in network.co, you'll get there and have a free sign up form to fill out. We do vet people before they get in there, so it's not a free for all. We make you sign up and agree to certain terms and all that, but there's no cost. But you do have to be a good, decent person, or we're not letting you stay. So come on in. The water's fine. Jon's in there, and we're going to be having a great conversation, even on this episode. as it drops. So thank you, Jon, for coming on the show today. Appreciate you so much.
Thank you, Mike, for having me.